Hello, good afternoon and welcome to Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in, as always. And surely a good afternoon that we're seeing coming for the markets as well. Recovered from the day's lowest point, 24,778. Around that mark is what the Nifty is trading at. So closer to that 24,800 mark. Now we're going to be having to watch out for whether this recovery that we've seen will move up further in the last hour or so of trade as well. Will be key to watch out for. Nifty Bank, that's also moved into the green as well. Marginal gains, very, very marginal gains right now is what it's holding on to. But in the last few minutes, you see it's come back on the green side. So that'll be interesting to watch out for. IT continues to be under pressure, but mid-cap, what a good recovery from the day's lowest point. Small cap, again, a good recovery from the day's lowest point over there as well. So yes, we are seeing recovery that's coming in the markets. Most of them, in terms of the sectors that were trading in the red, are moving to the green, broader end of the market especially. But that's the market setup that we're watching out for this afternoon. Let's bring on Shahina Mukadam, independent market expert, as well as Vaishali Parekh, Vice President, Technical Research at Prabhudas Lilladher, to answer all your stock-related queries. Shahina, as well as Vaishali, good afternoon, and thank you so much for joining in with us as always. Let's get started with all those stock-related queries for today. The first query is coming from Naman Kumar, who's writing to us from MP. He's holding 19,000 shares of Shree Digvijay Cement, and this is at a price of 110 rupees per share. Right now, making a little bit of loss on this one. Wants to know whether he should book the losses or continue to hold at current levels, maybe look to average. Shahina, what's your view?
Unless he's got a long-term holding, really long-term holding, like maybe 2 to 3 years, I don't see the stock moving too much from here because, as we heard the latest, in fact, very recent, there is going to be a change of the promoter group from one P to another P. So there is going to be, open offer also of 26%, but it's going into the hands of another P, whereas the market was expecting it will go into the hands of, one of the large cement companies. So that, at least as of now, is not happening. But valuations, if you hold it for the long term, are still attractive. It's just about the transfer is happening at around $81 per ton, which is, of course, not expensive. And cement industry as a whole is likely to do much better in the current year. The GST cut is going to give a boost to overall demand for cement. Prices also, average realizations also have moved up in the current year. Last year was a very dull year, FY25. FY26 will be a much better year. So if your investor can hold it for at least some stock, part of the holding for maybe 3 years, then he could see a decent return.
Absolutely. And just today also we've seen some announcements that came in as well, where maybe True North, who's the promoter, has agreed to divest some stake in this as well. So that'll be something to watch out for. Overall, cement pack also is something that you're saying keep an eye out on. Vaishali, on the technical front, Shree Digvijay Cement, what are we watching out for in terms of levels here? How is the move expected now?
Hi, very good afternoon, Vinny. So I think Digvijay long-term chart is also good. And today with the news and all, we are seeing some profit booking. But I don't see any cause of concern as long as 85 levels are held on. So now that he's already in a loss, still continue holding because no point, having a panic sell. So wait, continue as long as 85 levels are held on as support. This stock can bounce from there on. So in my opinion, not in a hurry should you sell.
Okay, don't sell in a hurry. Just hold on to it, So keep an eye out on Shree Digvijay Cement. Next query for today is coming from PC Achaya, who's writing to us from Bangalore. He's holding 300 shares of Infosys, purchased at a price of 1,500 rupees per share. Is making a loss on this one. Wants to know whether to exit or hold at current levels. Shahina, Infosys, what should they be keeping an eye out on now? Given that everyone suddenly is talking about moving towards those mid-cap IT names, Infosys obviously is the big company where you see, stable moves that have come in the past. Infosys continue to hold.
See, this is becoming very difficult to answer because what I totally agree with you. There is a shift towards mid cap, but the thing is now the valuations for mid cap and Infosys are, almost the same. So if you really want to be in IT, then why not Infosys? I would say valuations 1 year forward are just about 20 times PE. And also, if you saw the first quarter, the numbers were better than expectation. They've got a good order book position. Now, the problem over here is, I would still say that, since it's close to his buying price, investor can sort of get out of half the quantity. One is because, this is going to be news driven. As we heard some bit of negative news, not, I would say, rumor that, there could be tariffs on IT, and the whole sector saw this correction. So till we have some agreement with the US on tariffs and what exactly some stable understanding of what is the way forward, I think it's better to remain 50% in Infosys. I don't think you need to switch to any other stock in IT, but maybe take 50% off the table for now.
Okay, you're saying just maybe book out some bit of that loss right now, and remaining 50% you can continue to hold. Also, we did have that news flow. Also, my colleague Rima had highlighted there's a company, Endeavour, which is a public listed British company in this IT service pack as well, where they were saying the numbers that they reported were a bit weak. So maybe that concern or that rub-off is also coming in today on those IT companies. So keep an eye out on that. But nonetheless, right now on the fundamental front, book out half of your losses that you're seeing right now. Remaining half of your holding, continue to hold. Vaishali, for Infosys, what are we watching out for in terms of a move? Because last 6 months, last 1 year, in terms of a return, it's not done anything, right? Does it merit continuing to hold, or at least will it come back to the buy price of the viewer in the near term?
So if time is not a problem, I think overall right now the chart looks weak. In all likelihood, right now we are looking at a price of 1445. So I would say there is a possibility of this stock dragging down to further towards 1400, 1380 levels. So if you are a trader, then I of course would suggest that yes, book partial profit and see if the support levels break, or the nearest support that I would look at is 1430. So if these support levels break, then you should be exiting. But if you're not in a hurry, in my opinion, all these stocks are very cyclical. So as I said, the support levels are 1380 to 1400 levels. Start accumulating, so at least you can lower your cost. And when you see a good bounce coming in, at least to start with, you will regain your cost at least.
Okay, surely we'll be keeping an eye out on that. We have some updates coming in from sources, and this is on insurance related. Keep an eye out on this insurance name, ICICI Lombard, New India Assurance, where lower auto GST rates can trim the premium. That's something that I'm reading right now. Insurance declared value on which premium is calculated includes GST as well. So these are some clarifications and alerts that we're putting out right now. Keep an eye out on these names as well. Let's move on to the next query for today. We have Shruti Mishra, who's writing to us from Chandigarh. She's holding 60 shares of PNB Bank, and this is at a price of 70 rupees per share. She's asking whether to remain invested or switch to another company. Shahina, your view?
I would say remain invested. Valuations are very attractive. Price to book is just about less than 1, it's 0.9 times. And, if you see the balance sheet quality also is quite good. They've got a net NPA of just 0.4%. and 0.4 times. And also, if you have the loan growth that we saw in the Q1 was quite decent. They grew about 11% YOY. I would say that you continue to hold. It's not going to give you a runaway return from here on, but I would say it's a steady bank to hold.
Okay. And PNB on the technicals, what is your word, Vaishali?
So I agree with Shahina. Actually, the stock, if you look at the long term as well as the daily charts also, the stock is at a very good cluster of support levels. So I would say 9800 is a very good support level. And once we see a pickup coming in PSU banks, I think this projected target, what we are looking at is 115 to 120. So in my opinion, please hold and also wait for some, if there is a dip, add more.
Okay, if there's a dip, add more. That's what Vaishali is saying as well. But let's move on to the next query. And this is an investment query that we have coming from Tejvita, who's writing to us from Bangalore. She's saying she wants to invest in pharma companies and is asking if Occam's drugs is a good bet for the long term. Shahina, your view on Occam's drugs. There was a news flow when we'd seen a sudden run-up as coming in as well. Is this a company that you would look to bet on in the pharma space, or are there other names in the long-term story?
So actually, I don't track Occam's. So I cannot give an opinion on that. But the other pharma stocks that you can look at in terms of valuation, you have Arvindo Pharma, which is attractively valued. Also, though the stock has given you that bit of correction, which you can, in my view, take it as an opportunity to buy because they have announced that huge acquisition in the US, which in the shorter term may see that bit of negative sentiment. But I think it is going to work out well for them. They have got a very strong balance sheet which can support this acquisition. Biocon is another stock that actually can give you a decent return. They've got good products that are to be launched in the US market, where of course we'll have to watch out for what will happen on the tariff front. But as of now, there is nothing. So it's a good bet to hold, to enter into.
Okay. And on the technicals, Vaishali, given that the stock has seen a correction in the last 1 year, and specifically in the 6 months as well, right? There was a news flow, it went up, and then again it saw a correction. So is this the correct level to maybe enter the stock?
I don't think so. I don't see any sign of reversal also. So, in my opinion, stocks which are already having an established trend. So, one of them is Glenmark, even Lupin, Fair Value, and another domestic place, Mankind Pharma. So, I would go choose these stocks which have a better conviction as compared to this. Akum, I would only consider buying or having a positive view only above 500. So if you're ready to wait because it could see some more downside or it may bounce, it is just not in a trend. So only above 500, it would gather some conviction. But till then, I would definitely focus on the stocks that I recommended.
Okay, so right now, maybe just hold on before you buy Akum's drugs. But till then, there are other names that Shahina as well as Vaishali are mentioned in the Pharma pack, Tej with us, so you can look at that. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. We'll be back with more of your stock-related queries after the break. Welcome back to your stocks on CNBC-TV18. We still have with us Shahina Mukadam as well as Vaishali Parekh to answer all those stock queries that you all have sent us. Let's move on to the next query for today, ladies. And we have Arvind, who is writing to us from Chennai. He is saying that he wants to invest in J&K Bank, and this is on the back of its earnings. Shahina, J&K Bank, is that something that you would be looking at?
See, the earnings have improved. If you see in the last 2 years, even in the first quarter, numbers are looking much better. At the same time, I think the price to book is around 1 time. So at these levels, what I would say is that there are better banks that are available. I would say smaller, NBFCs which could be looked at. There are alternates. So I would not prefer buying J&K Bank. Given that while numbers are better, I think valuations being 1 time price to book, it is going to limit any major upside from here. So I would say look at some other NBFCs.
Okay, look at some other names coming in there. Vaishali, your view, J&K Bank, or would you also suggest some other names to look at?
So technically, this looks quite right, but I think I would prefer a stock like Bank of Maharashtra or ICICI. That would be my favorite. And in that regard, why not even SBI or Union Bank? I would go more for these banks.
Okay, other bank suggestions that have come in from both our experts. But let's move on to the next query. This is also coming in from the financial side. We have Edelin, who is writing to us from Kerala. She's holding 2,000 shares of Equitas Small Finance Bank. The average price is 55 rupees per share. Right now, it's at 52, so not much of a loss. Now, she's a long-term investor and is asking if she can continue to hold the stock for 3 more years. Does it make sense holding Equitas Small Finance Bank for 3 years, Shahina?
Here also, I would say, the price to book here also is about 1 time. They have actually taken a hit because of their exposure to microfinance, which, they had to take huge write-offs, because of which the numbers were impacted. Now, given that they have cleared their books and it's just about 10% of their overall loan book, at the same time, I think, that is going to remain, a pressure point for them. So I would here again prefer that the investor looks at some other the NBFCs, other banks, some of the NBFCs that are now being talked about that look pretty interesting. She can switch to that.
Okay. And Vaishali, your view?
So for now, I would take it surely take it as a trading bet because I think it's pretty much done with its corrective move. So keep 50 as stop loss, and once we see momentum setting in, this can go towards 55, 58, 60. So till then, I would definitely buy. I would have a relook just above 60 levels because that would get the stock into a trend. So trading perspective, yes.
Okay, trading perspective, yes, continue to hold on. Let's move on to the next query. Kalyan Jewelers, this is the stock we'll talk about. Tahir Khan from Gujarat is writing to us. He's holding 2,400 shares of Kalyan Jewelers. Price is 541 rupees per share, making a loss. Future prospects of the company, and should he continue to hold? Shahina, Kalyan Jewelers, your bet.
See, long-term prospects are good because they are very aggressively opening new stores. The GST has not actually given them any direct benefit, but at the same time, I think with more money in the hands of consumers, demand is likely to be good. Having said that, I think I still would say that it will take time for him to get a decent return from here because valuations are expensive, at least for the next 1 odd year. It is now available at about 20 times EV to EBITDA, which in my view is expensive for the shorter term. So I would say a bit of consolidation in the stock, time-wise correction before he gets a decent return.
Okay. And your view, Vaishali, for Kalyan Jewelers, does it merit holding the stock?
No, it's fine, but do keep a stop loss because there's nothing much happening in this stock. So I would say keep a stop loss of 480 and continue holding.
Okay, let's move on to the next query. We have Shiv Saran writing to us from Kanpur. He's holding 1,500 shares of Bank of Baroda. 248 rupees per share is what he's holding. He's the short-term investor, so he wants the levels that he should keep an eye out on. Vaishali, could you help him with what should we watch out for as a short-term investors here?
Definitely. So this is right now on a corrective mode. I think final support lies at 230. So as long as 230 levels are held on, you can expect a bounce. If you have to buy, keep 229 as your stop loss and buy this stock. And let's hope if it bounces, it can give you around 240. That would be the way to carry on this trade. But exit if 229 levels break.
Okay, and Shahina, your view for Bank of Baroda?
I would agree. Do keep a strict stop loss of between say 220, 229 or whatever that Vaishali suggested. But I think at the same time, price to book is about 0.9 times here. And the management is very confident of maintaining a price to return on assets of about 1%. So it's a hold.
Okay, hold coming in there. But with that, we're absolutely out of time on this edition of Your Stocks. So thank you so much, Vaishali as well as Shahina, for always joining us and helping our viewers solve all these doubts as well. And with that, we'll wind down the edition. Remember, you can always email us your queries at the email address fetching at the top of the screen for y'all. And with that, it's a goodbye from me, the team who put this show together. But don't go anywhere. Last hour of trade is still left. And for that, your closing bell.